When should your business be taxed as an S corporation? That's going to be the topic of this video, and specifically, when does it make financial sense for your business to be taxed as an S corporation? So I'm going to be talking about how the S corporation saves you money, the cost associated with having an S corporation, and sort of what is the break-even point? How much profit do you need for it to make sense to be taxed as an S corporation? This is your first time watching. My name is Navi Miraj. I'm a CPA that specifically works with realtors around the country, save thousands of dollars in taxes. But if you're not a real estate professional, please do continue to watch because this strategy really applies to all small businesses. So let me just lay the foundation here. On my YouTube channel, you'll find a video that I shot recently where I said, hey, there are 4 reasons where I believe you should not have your business taxed as an S corporation. And that's right, you heard me say 4 reasons why not to, okay? Everyone is talking about why you should be an S Corp, but I'm telling you there are reasons why you shouldn't be. Some of those reasons are, and the topic of this video is, you're not making enough profit for it to make financial sense, and we're gonna take a deep dive into that in this video. But the other reasons were, if you might have W-2 income, so you are employed somewhere, you make a high salary, but you also have a business on the side, it may not make sense for your business to be taxed as an S corporation. Another reason might be your state does not recognize the S corporation or taxes it very heavily, and so you don't see any real tax savings there. And the 4th reason was you pretty much do passive activities. In the eyes of the IRS, an example of that would be investing in buy and hold rental real estate where you are the landlord and you have a tenant and you just make passive income, which is that rental income. In that situation, you would not want to be taxed as an S corporation. So this video is going to be taking a deeper dive into sort of reason number 1, which was, you may not be profitable enough and it may not make sense. So let me sort of transition to the whiteboard here and we'll dive into this, okay? So I'm saying here that if your business is taxed as a sole proprietorship, or maybe it's a single member LLC, which is taxed as a sole proprietorship. I know that already might be a little bit confusing. I've got videos on my YouTube channel that talk about, when to form an LLC, corporation, all that different stuff. So watch that video, that'll make more sense. So I'm saying here, your taxes are sole proprietorship. So you had a revenue of $60,000, you had expenses of $20,000, which left you with a profit of $40,000, right? Some of you might be saying, wow, $20,000 expenses, that's kind of high considering you only made $60,000 in sales. Well, when you work with an accountant who knows about different tax strategies, they're going to show you strategies that sort of increase your expenses. And so that's why I kind of put $20,000 in expenses there. So your profit is $40,000. So what taxes do you have to pay as a small business owner, making $40,000 of profit? Well, you pay 2 types of taxes. Those taxes are self-employment taxes. So you'll pay 15.3% of the profit in self-employment taxes, so that equates to about $6,000. And you'll have federal income tax that you'll have to pay on the $40,000. So I don't know where you're gonna fall within the tax brackets. 0% is probably not realistic, but you're probably falling between 10 and as upwards of 40%, depending on what, if you have state income tax or not. So again, you pay 2 types of tax on your profit: self-employment tax, federal and state income tax. But what happens when you're an S corporation, right? What is this strategy all about? Well, this strategy is all about self-employment tax. So what I'm trying to drive home here is that it has nothing to do with income tax, okay? This all has to do with self-employment tax. You're gonna pay the income tax at about the same rate when you're an S corporation. But what changes is the self-employment tax. So specifically, you still have $40,000 in profit when you're an S Corp, right? You didn't sell any more product or offer any more services when you're an S Corp. But what happens is this $40,000 in profit is split into 2 buckets, right? So I put W-2 here. What I mean by that is the IRS wants you to take a reasonable salary when you're an S corporation. So here I'm saying on $40,000 of profit, that reasonable salary might be about half. It might be like 50% of this. So you'll take a salary of $20,000 and that salary will pay self-employment tax. So 20,000 times the 15.3%, you're going to get self-employment tax of about $3,000, right? Now, what happens to the other half, the second bucket? Well, that second bucket, you're going to take as a distribution from your S corporation. And so how much self-employment tax do you pay on the distribution? And the answer is 0. So you don't pay any self-employment tax on the distribution. So in this example, as an S corporation, you pay $3,000 in self-employment taxes, whereas here you paid $6,000 in self-employment taxes. So you have a savings of $3,000, right? The $6,000 here versus the $3,000 there gives you a $3,000 tax savings. Again, federal income tax, you're going to pay that here, and you're going to pay that as an S Corp. So that really doesn't matter. So what are the costs associated with having an S corporation? So you're going to have a few. You might have a couple more than these, but these are the big ones. So you're going to have to either form an LLC or create a corporation and then elect to have it taxed as an S corporation. And so when you form that LLC or corporation, you are going to have to file an annual report with your state each year. And the fees on that depend or change, I should say, from state to state, right? So this could be as cheap as $100. It could be as much as $300. So I'm just saying $150. Another fee that you'll have is tax prep fees. So, if you're dealing with a competent CPA or accounting professional who is taking the time to teach you strategies, implement those strategies, they're probably going to charge you anywhere from $800 to $1,200, okay? So I'm saying, your tax prep cost might be about $1,000. If you're working with, a not so good accountant who's just going to take the numbers that you give them and throw it in their tax software, then maybe you can get away with paying less, but again, you get what you pay for. You might end up paying more in taxes if that's the type of professional that you decide to work with. Other costs you have are payroll. I believe I said earlier that with an S corporation, you have to take a quote unquote reasonable salary per the IRS. Trust me, you probably don't want to be dealing with the paperwork associated with having payroll because you have to make either, or not either, but both quarterly and annual tax reporting requirements. And so you really don't want to deal with that. You want to be focused on running your business and growing revenue. And so you'll hire a payroll processing company to do that. So that might cost about $50 a month or $600 for the year. So when you add up all these costs, you get about $1,750, right? So from here, I'm saying this is kind of like the break-even point where I think it makes sense to maybe have your LLC taxed as an S corporation because, you would have been paying $6,000 in self-employment taxes here. Now you only have to pay $3,000, so you save $3,000 in taxes, but then you have these costs, right? So when you take the $3,000 of tax savings and you deduct the $1,750 in additional costs, you're really pocketing about $1,250 in your pocket, right? So you don't want to deploy this strategy to break even. You want to deploy this strategy when you can at least make, $1,200 and put that back in your profit. But what about when you start making more money than this, right? What about if your profit is more like $60,000? Well, and then in that example, you might tweak some of these numbers. You might tweak how much you get paid in the form of a salary versus a distribution. And so you might save more like $5,500 in self-employment taxes. Or if your profit is $75,000, then you might save more like $6,500. And if your profit's, $100,000 or more, then you can easily save $10,000 in taxes sort of by deploying this strategy, right? So I hope that you found this video to be informative and you received some value out of it. Maybe I cleared some things up for you that are not so clear when you watch other videos or you're trying to research this on your own. As I mentioned earlier, I'll be producing other videos on those other 3 reasons where I said it may not be a good idea to be taxed as an S corporation, so you can learn the reason why I'm saying these things and apply it to your small business. So make sure you subscribe so you can catch that content as I release those videos. If you'd like to contact me and you're watching this on on YouTube rather, you'll see the information below in the description. Or if you're on other social media platforms and you're watching this video, just visit my website, which is navimirajcpa.com, or click on my profile within that social media site, and I'm sure there's a link in there to take you to my website or maybe my scheduling page to spend some time with me. So I appreciate all the comments, all the feedback I've been getting. Like I said, do subscribe, and I will see you in the next video.